Hello and welcome to this weekend's edition of Unplugged. Here we are at one of the prime locations of Mumbai in Walkeshwar, and my guest today needs no introduction. One of the most charismatic personalities of stock markets, always clear with his thoughts, whether it's a bull market or a bear market, never want to hold his thoughts back. Shankar Sharma. Shankar, thanks a lot for joining us. You know, they say a view to die for, and this is what you have in this house right now. Do you ever get seasick? I mean, it's it's surrounded by sea from all the four sides.
Yeah, that's true. I mean, it's almost like being on an island. So when I go to work to my office in Nariman Point, when I'm coming back, it's almost as if I am going to, back to my island rather than being connected to the whole city of Mumbai.
Temptation to use the boat instead of car while coming back?
Yeah, I wish they had it, but there is a small boat, but obviously we can't use that.
Yeah, so no need to go to any islands or any beach locations. You have it here right now.
Yeah, I mean, we kind of have stopped going to any beach holiday for years now because, you'll get one room in one small place.
Yes.
So you may as well stay in a city I love and, as close to the sea as we are.
Yeah, I mean, it's a beautiful house, Shankar, I must say that. Let's talk a bit about, your personality, Shankar. You're a big movie buff. Amitabh Bachchan got typecast in Angry Young Man and he never got out of that image. You have been typecast as the big bear. Does that image bother you, or are you fine with that image?
No, I think it's an incorrect image, but fact of the matter is I'm not a celebrity, or I don't derive my income out of being, a celebrity like Amitabh Bachchan does. So he has a problem if he's typecast. I don't have a problem if I'm typecast, but I don't think the description itself is accurate because I have been bearish all of twice in the last 25 years, which was in 2000 and in 2007.
Yes.
And the reality is nobody else comes out and says it, even if they do believe it. Yes. So if I do come out and say it twice in 25 years, I don't think that qualifies quite as a bear, right?
Well, yes, and I remember after that bear market, you were also a fearless bull as well. I mean, and you made a lot of money in both bull market and bear market.
But I've always made money, or rather more money than in a bull market than in a bear market. The bear market call is just an insurance. It is to protect what you made in the bull market.
Is it a misconception that Shankar Sharma has actually made more money in bear market than he has in bull market?
You cannot make more money in a bear market. It's arithmetically impossible. You can't short 1,000 crores and hope to make 20%, 200 crores. But you can go long 200 crores and hope to make 5 times that, which is 1,000 crores.
Let's talk about your philosophy, Shankar. I was reading somewhere that your philosophy is to look for junk stocks at times, or some of the stocks, companies which are going through problem. Why do you look for such opportunities instead of going for, say, some clean companies?
I don't think the companies and problems are unclean companies to begin with. I don't look at companies with fraud. Okay. That's the unclean part. I look at reasonable companies who are stuck in a bad time. And there are many such companies at all points of the market cycle. Fraud is something that obviously you cannot touch because that promoter is going to always come back and sting whoever is the investor. So that's strictly off limits. But the reason why I like companies which are a little complicated, the problems are a little complex, is that I believe that if I'm entering the equity markets, I'm not doing it because I'm trying to buy a debenture. So I completely have distinctions between my own personal portfolio, wherein my fixed income part yields me a dollar return of about 14-15%.
Wow.
Okay? With that return, why should I go and buy a stock that yields me 20% compounded in rupee terms? It doesn't make sense. I'm looking to make 50, 100, 200% in a year for me to get interested in the stock market. How
do you make 15% in bond market, Shankar, dollar terms?
Very simple. I mean, you get leverage at less than 1%.
Okay.
If you're borrowing 1 month, 2 month, 3 month, you look at interest rate across the world. I can borrow at 0.8%, 0.5% even.
Okay.
The bond portfolio is yielding about 5%, 6%. You leverage 3 times over. You're making 15%.
So that's where you make your money, and you're not interested in stock market, which gives so much volatility.
I'm interested in the stock market, but only when I'm seeing 50, 100% returns per year in a stock or a basket of stocks, which usually will happen when there is trouble. It will not happen in a steady state, normal situation.
You made a lot of money in companies which actually destroyed a lot of wealth for a lot of people later. Penta Media, the DSQs of the world, the GTLs of the world. What's the secret here?
You should know when to sell.
Exactly.
And as my favorite philosophy goes, It's the same in infrastructure companies also, by the way.
IVRCL.
of the world.
Yes.
I mean, I've made a lot of money in them on both sides.
Okay.
So, you look for a certain basket of stocks, which you catch them before they become popular. You ride them all the way to their popularity highs, and then you short them when you think that they have gone completely out of whack, which is what I did in the tech boom of 99-2000. The same stocks that I made money going long, the same stocks I made money going short. And I have no emotional attachment to any company or management. A number of the companies I short are good friends of mine. Okay, the managements, will tell me, what is this? What are we hearing that you shorted our stock? I say, boss, it's nothing to do with your equation with me and vice versa. This is a stock which is away from you.
When was the last time management called you to say that, why are you shorting our stock, Shankar?
No, that's not happened for a while. I think, managements also have matured in India. But 15-20 years back, they used to get very emotional about these things. Now I think they understand that with or without anybody selling the stocks can still go down, right? I mean, it happens all the time.
This theory of yours is quite opposite to what a lot of people tell us on CNBC TV 18, that, timing does not matter. You should, invest at any point and stay invested. You should buy a business. You are completely, opposite in that view, in that regard, that you think that timing is everything.
I believe timing is everything, means everything, okay? But there are ways to do that, and not everybody can do that. It's a very complicated thing, which is why most people are better off not trying to do that. But that's not to say you should not try to do that, provided you have done a lot of work on it. And we have done huge amount of work on that in the last 20 years. I dare say better than, at least in greater depth than many people across the world. Okay. So if it pays me, it works for me, I'm going to keep doing that. That's fine. It's like the oil trade at $26, $27 that we came out with, in February. I mean, oil is up, what, 90% or 100%. Yes. What's changed in oil? Because suddenly the world run out of oil? Nothing.
It's
the stock
technicals,
is up.
Maybe.
There are many factors. It's not technicals. I mean, everybody does technicals.
Okay. So maybe it got oversold and then it bounced back. Could be that.
It's a complicated answer. I mean, unfortunately,
are you still bullish on oil, or are you taking that money off now?
I think it's okay. I don't think it's going to fall off in a hurry.
Okay.
So the point that I'm trying to make is that timing works, but I don't think it works for everybody.
Okay, it doesn't work for everybody. What about the current state of market, Shankar? Before we move on to some lighter subjects, how do you look at the current market right now? Over the last 3 weeks or so, we have seen large caps make a bit of a comeback, but otherwise for the last 2 years, it's been just about mid caps and small caps. Do you think that's going to continue?
Well, that's been the other big call I've had in the last 2 years. That I have pounded the table on small and mid caps. And again, a number of mutual funds and CIOs have disagreed with me periodically, saying that no, large caps will come back. And the reason, I've had a very simple rationale. My view was that India does not have enough economic growth. Forget the 7.9, that's all rubbish, we all know that. The real underlying economic growth is still tepid. It's not bad, but it's not great either. You need, for large caps to do well, you need a strong, solid, genuine 7.5%. That's not going to happen. But for smaller companies, you don't need 7.5%. You might need 4-5%. They can figure out growth in a small geography, small product market, small segment. And that trade has worked out beautifully. And I still continue to believe that Indian small caps are the single best equity class in the world, without any doubt.
For our viewers who always love to hear your views, any 2 or 3 ideas that look interesting at this point in time?
As I said, we have liked small cap infra, we liked small cap chemical companies. We've liked some of the smaller financials. They're all doing well. I think they will continue doing well.
What about a stock like Tata Motors, which made you a lot of money? You said that you don't like their cars, the JLR cars, they're ugly cars, but so what? The stock does well.
No, I said I don't like their SUVs, which is the Land Rover part.
Okay, the Land Rover part you don't like, yes. But the Jaguar cars
I like the Jaguars. I own one.
Yeah.
From some of the money I made from the stock. It was a very, very simple trade. I'll be honest with you. I was in London in 2010. The company was at the verge of going bust. It was losing $1 billion. I saw the new models on Hyde Park, on Park Lane. And I just made a quick calculation with my analyst that if they just gain 1% market share of the luxury market, from 0.3% they go to 1.3%, what is their delta in profits? And the number that was coming out to be like $500 million of profit. And I asked my guy to check his math, are you sure this is the number? And he said, yeah, boss, unless Excel has got a problem, there is a bug, this is the number. And that was it, absolutely crushed valuation. Market is betting on $1 billion loss. Our bet was a half a billion dollar profit. And that was a huge delta. Yes. So that was a tough call to make, but in our reckoning, it was a no-brainer.
Is the big move already over in Tata Motors, or do you see more gain going forward?
I like Tata Motors. We've liked it for a while. But I don't think there is huge untapped story in there, which you can make like a, I think you can make a comfortable 15-20% from it, But, I'm not looking to make that. Okay. I'm looking to make the 2010 kind of returns.
Okay, Shankar, both you and me are quite active on Twitter. One of the tweets that you recently made was on Axis Bank, that how, 3 or 4 years of profitability could be wiped out.
It is.
It is, right?
If the numbers are right,
if the numbers are
saying,
right.
Forget about what we are saying.
But everything is good at a price. Do you think stocks like Axis, ICICI are good at current prices?
Look, I don't like, broadly on a philosophical basis, I don't like banks. Okay? There have been a few exceptions. IndusInd Bank, we were the first to discover it at 40 rupees. HDFC Bank, we put out our first research when it was listed in 1996. When we said that today it's a baby, we put a photograph of a baby and it's going to become Arnold Schwarzenegger. We put a photograph of Arnold Schwarzenegger. And that's exactly how it has turned out. Yeah. Those are exceptions. By and large, banking will make you 4 or 5 years of money. Then they will take big hits, which will wipe out actually the previous year's 4 or 5 years profits. And that's exactly what you're seeing in Axis Bank.
What about pharma now? I mean, from the horrible expensive valuations, we have seen almost all stocks correct quite a bit.
We are at a very interesting point, Anuj. Broadly on a broad top-down market basis. Two big bulwarks of India have been IT and pharma. And both are facing very severe challenges, extremely severe challenges. And it could be a challenge of the kind that at least IT may not be able to overcome. I mean, cloud, I think, is a serious problem. Okay. Cloud represents a complete new dimension. It's so disruptive to our IT models, that it can completely force them to revisit every single assumption of theirs. And pharma is facing the problems of obviously not having been very kosher in the way they have done business. Pharma may well be able to overcome, but IT is in a spot of hope.
Okay, so IT story is over for you.
I'm not saying it's over. I think there's a serious problem on the horizon.